The EIA reported a 4 million barrel draw in crude oil and a 3.4 million barrel build in inventories for gasoline products. Here to talk to us about this today is Peter Amandio. Peter, what do you make of the draw?
Well, as far as the draw goes today, it wasn't what was expected. They were expecting a small draw of around 500,000. It ended up being 4 million. We're screaming pretty much to the upside right now in WTI. It seems over the past couple of days, or since the Israeli situation, that the focus has been more on the WTI this time rather than the Brent mark.
And why is the focus more on WTI then?
I don't know why. A lot of times it isn't why, it just is. Oftentimes when there's fear, it goes to the Brent market, but for some reason, right now it happens to be in the WTI. Now, last week we had a draw of about 7 million. That made sense because we were down at $100. And if you're a hedger and you're a refiner, you're going to draw when it's down around $100. And a lot of times these people will have trigger points. They'll look at a chart. They'll see that we're at the bottom of a Bollinger on a weekly, that it's a good point to possibly draw on crude if you're a refiner. So last week made a lot of sense. This week, well, it ended up being 4 million when it should have only been around 500,000 from what they were expecting. And the WTI is screaming right now. And to me, above 102.60 should bring us up to 105. We have a little bit of a level around 103.40, which we're pretty close to right now. But I suspect we go through that, we should test up around 105 again.
And when would we test that?
Well, we go through 103.40 today. I would imagine over the next few sessions, we should see a test up around 105.
All right, Peter, as always, thanks so much.
You're welcome.
Thanks again to my guest, Peter Amandio, here at the New York Mercantile Exchange for The Street. I'm Joe Doe.